In this new video series, go behind the scenes of our prop firm, which houses numerous elite 7- and 8-figure traders, to learn our techniques and processes for producing robust, high-accuracy options trading strategies. In this case, a powerful option strategy with an 85% win rate. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In part 5 of this new video series, learn a key trading principle: always trade with stops. That has helped our traders thrive, and how that drove the development of this new and powerful option strategy for you. Let's get to work on sharing this important trading principle and trading strategy so that you can grow your trading account. We've done a lot of work with a talented trader who transitioned from being dismissed at one prop firm to hired at ours. We thought we could help him. We thought if we could get him focusing on his best trades, we could significantly improve his results. There was a lot of good in his trading mixed in with too many trades he just needed to eliminate. We thought he would add value to one of our teams, and for a few years he did. He turned around his trading career. In fact, he became a green shirt trader, netting over $1 million in net trading profits for the year. Was thrilled with the firm, his team, and the state of his trading career. But the demons of his prior sloppy trading past always lurked in the background. And even when he was going well, he'd get off track, take some trades that were not in his best interest, draw down at a manageable amount, but then get back to what he did best and start taking home some nice trading checks again. But then, for some unknown reason, the trader convinced himself that one sector had to go up. He started drawing down. In fact, he drew down too much. We gave him some more room for his idea to work, but then asked for his stops. What prices he would absolutely have to close out his positions. And if he didn't, then we would close them out for him. The trader was adamant that the trade would work and refused to give us his stops. Yikes. This was a highly profitable trader for years, a contributing member to his team, in possession of a prime seat at a tier 1 prop firm, with a trading future ahead of him where he could have made millions more. All he had to do was hit out of that damn losing position, live to play another day, and move on to the next good trading idea. And he just wouldn't. He couldn't. He couldn't admit he was wrong on this one damn trade. And he got fired. At our firm, if you don't respect firm capital, if you don't trade within the firm risk management rules, you're going to lose your seat. And he did lose his seat at the firm. He lost access to a $10 million trading account. How unnecessary. How disappointing for all of us. Every trade needs a stop. Period. Full stop. We teach SMB firm traders to determine their stop before they enter a position. Elite traders control their risk on every trade. Good trading is not allowing a position to trade against you well past your stop limit because you believe, because you think you know that it will trade higher. This is not good trading. This is being arrogant. This is being unprofessional. That is gambling. There's only one way that trading story is going to end. You will blow up your trading account. We stay in the game as traders. We respect that anything can happen in the market or a stock at any time. We accept this as part of the game. Irrational moves are part of the game for which we must manage. We live to play another day. There are plenty of opportunities in the market. We don't need to be right on one stinking trade. Another one will present itself, one that makes sense to you, one that works in your favor quickly, that does not require drawdown, and that offers significant profit. But if you blow up being stubborn and arrogant and unprofessional in another trade, you will not be able to catch the next easy trade. We don't blow up our trading account because the stock made a crazy move. We take our loss when that happens and live to play another day. There's plenty of opportunity in the market. We don't have to be right that often. We just have to control our risk and place trades with edge. That is being professional. That is being a professional trader. That is being a professional sustaining trader, able to experience all the rewards that come with that. When Scott and Seth Freudberg, head of our options desk, developed the weekly options income machine, they were sure to control their risk, to create a stop for each trade. And so Seth, I'd love to bring you in here, and I wonder if you might share with us how you created this stop while also producing at the same time, contemporaneously, a very high win rate for the trade.
Well, Mike, we well know on the options trading desk that every trade has to have a stop. That's true in any trading practice across the board in the trading world. And so when we decided to partner up with Scott Andrews and incorporate the IQ signal with option strategies, we had a problem that we had to solve. And every trading system has problems, obstacles that you've got to overcome to make them successful. This was no exception. The IQ signal does one thing. It does it very well, but it does one thing. It predicts, when it fires off, the likelihood of the market rallying off the opening price or selling off the opening price, period. That's what it does. It has no comment at all on anything that happens between 9:30 Eastern Time and 4 p.m. Eastern Time. All it predicts is how that beginning snapshot and that ending snapshot will end. In order to take advantage of the high win rate of the signal, we can't mess with that trade during the day, which means that we could have a move very, very badly against us intraday, and if we respond to that, we're ultimately going to lower the win rate because the signal's so strong, it knows, even on days where the market initially runs against the signal, that there's a very high probability that it will ultimately end up in the direction that the signal predicted. So going in and messing with the trade and pulling the trade off intraday is a problem. Yet, we have a reality, and that is no prop firm can exist without every trader having a stop on every trade. So how do we deal with the fact that we've got to let this trade run as far as it needs to in order to, in many cases, rebound and create a win for you? How do we do that? And the answer is embedded in the strategy that we decided to utilize for this system, and that is the credit spread. Option spreads build the stop automatically into the trade. An option spread puts the stop in the second the trade is initiated. So you have your stop, and that affords us the ability to take full advantage of the signal.
So Seth, if I can just expand upon that concept, because it seems a little bit of a contrarian idea, right? That we're predicting where the market's going to be, but not the path getting there. But that's absolutely the strength of the signal. And we actually looked and evaluated those days in which the market went against the signal after the open, sometimes to a very large amount. And we found that eliminating those would have cost us a lot of money. The signal and its efficacy still holds true. You just have to trust it till the end of the day and ignore the journey from the open to the close.
We realize that most retail traders don't have the expertise and training to perform a properly designed backtest that would meet professional standards, and so SMB has taken care of that for you. We've developed a highly profitable one-day options trading system based on the IQ signal that can easily be implemented by traders of any experience level in just minutes a day. If you're interested in learning more about exactly how that system works, go ahead, click the link that should be appearing now at the top right corner of your screen. That will open the free workshop registration page in a new window, so don't worry, you won't lose this video. I think you'll be pretty intrigued by what we've developed for you, so pause this video, sign up now, and then resume watching. So let's take a look at a recent open for an example of what we're talking about here. Let's say that instead of using an option spread, we decided to simply sell that short put that we described in earlier videos, which is the trade you'd use if you believed the market was going to be bullish that day. So on this particular day, the market opened up at 38.02, so you might have sold the short 3800 put and received $1,955 for doing that. What that means is if the market closed above 3800, you'd collect that whole $1,955 as your profit. But at 11:15 in that recent morning, the market, instead of rallying, sold off, contra to the prediction of the IQ signal, down to 37.42. Well, by that time, you're down $3,900 on the trade. Most traders would have been stopped out of the trade at that point. But let's look at how we do, in fact, handle it in our use of the IQ signal through option spreads. When we initiate these trades, we start not with a single short put, but with a short put credit spread. The difference is significant. A short put at 3,800 will, of course, draw down if the market sells off. But that long put that we bought effectively puts a floor on the trade. The trade can get no worse than, in this case, because we collected $700 for this put credit spread, we have a risk of $1,290. That's a lot better than $3,900 and a much more reasonable risk reward when the probability of the market rallying is 71%, as it is with the IQ signal. And so in this case then, the great significance of this is that you can now stay in the trade regardless of what the market does. Because in your worst case scenario, you have a completely acceptable loss for a trade. But instead, we can be patient and allow the trade to play out so that by the end of the day, the market dramatically bounced. It ended up closing 40 points above the opening price, and we had a full win of $700. Instead of, with simply the short put scenario, we would have been stopped out of the trade at 11:15 in the morning. A tragic outcome for what otherwise would have been a fantastic trade. Any great trading system is going to have some obstacles that you're going to need to overcome in order to adopt it at a professional firm where firm capital is at stake and you are required to conserve and grow that capital. In order to stay within those standards, we had to find a solution to this stop issue with the IQ signal. The put credit spread or the call credit spread, the two option spreads that we utilize to trade this signal, afforded us that answer and turned what could have been an untenable trading situation into something that has a tremendous expectancy with small drawdowns. So as I mentioned earlier, regardless of the type of trader you are and your experience level, you can utilize our system to augment your main trading activities because the IQ signal only occurs 2 to 3 times a month on average and can be executed in under a minute the few times per month that you do receive a signal. We'd encourage you to attend the webinar where we can offer you this system at a huge discount. So just go ahead, click the link that should be appearing now at the top right corner of your screen. That will open the free workshop registration page in the new window. I think you're going to be pretty intrigued by what we've developed for you. So sign up now to arm yourself with this powerful trading signal before it's too late.